But time now to welcome on board Digant Haria, co-founder GreenEdge Wealth, joining us on the show to talk to us about all the updates that we've got from financials as well as what's happening to HDFC Bank. Digant, let's start with HDFC Bank itself. Of course, that big MSCI weight adjustment happening and the probability of inflows coming in. But barring that technical adjustment, on the fundamentals, do you think something has changed incrementally? And once that Q1 update comes, what kind of expectations would you have?
Hi, good afternoon, Anisha. Good to be here. See, as you said, this MSCI is a technical event where, some flows will happen in the stock. But let's not forget, it's just a year since the big merger between HDFC Limited and bank happened. And two of the biggest problems which were hitting, the HDFC entity is one is the deposit growth. The system, deposit is still very tight. So deposit growth does not come very easily. Even when I look at the deposit rates today, across maturities, HDFC Bank is offering 30 to 40 bips higher than an SBI or an ICICI, which was never the case before the merger. So I think, this margin improvement, everybody is saying that, from 3.4, 3.5 will, quickly go to 4. I don't think that's going to happen in a hurry. And as far as, even the loan growth is concerned, loan growth is probably, the retail part is going slow. Whatever growth will pick up will probably happen on the infra corporate side. HDFC is not known to be very strong on those sides. So I don't see that growth and the margin problems will get solved in the immediate quarter. And the stock has had a good run up along with the market. So I think people should celebrate, and you have to wait for a few more quarters before the results actually fire up.
Digant, good afternoon. This is Vinny joining in the conversation as well. I want to switch focus from a large bank to a large NBFC and Bajaj Finance today. Now, everyone's wondering why is it not performing in trade today? The Q1 update doesn't seem that bad, right? Strong AUM is what we're seeing. Customer acquisition is there. It's expecting in terms of 30% FY25 AUM growth is something that one is watching out for maybe in FY25. What is it that is not exciting right now?
Good afternoon. It's a good question. Sometimes even I wonder that what it is that is not exciting because, the growth seems good. But see, Bajaj Finance typically, the RBI has not been very soft on the whole retail lending pack. If you look at the regulatory tightening action, which started with, HDFC Bank being barred from credit cards, and then a lot of institutions were, punished or, given warnings by the RBI. So see, one is we are not yet over on that front, as in, the retail part of overheating and RBI getting comfort with the KYC and the retail lending practices. I think there is still a quarter or two more before that happens. Second is Bajaj Finance. There's a lot of deposit repricing that is happening in Bajaj Finance. So while the growth is good, there's absolutely no complaint. I think margins will be a little soft this quarter, specifically. And that is why probably Bajaj Finance does not react to these growth numbers, and it's not just this quarter. It has not been reacting to good growth numbers for many quarters. But having said that, I think there's 3 years of time consolidation which has happened. The earnings and the new businesses, the new products have started contributing. So I think we are just 1 or 2 quarter away from where Bajaj Finance should actually become the best pick in the financial space amongst the large caps. For we think that owning Bajaj Finance is a far better proposition than owning an HDFC Bank or a Kotak Bank or even say an ICICI Bank. If we have to look at next 2 years.
Finance is one of the best picks, perhaps. Maybe within a quarter or two, it will turn that versus the rest of the financial peers as well. But Digant, from the mid-tier banking names, the kind of Q1 updates that we've got from, let's say, a Bandhan, wherein the deposit growth was quite strong despite that CASA slip, Federal Bank, which reported a decent improvement, even CSB, Suryoda, etc., for that matter, and Yes Bank. Anything that stood out to you in the Q1 performance, or any inherent theme that you're watching out for from Q1 numbers so far?
Yeah, so I think one theme is that all these microfinance heavy banks, I think they are, there the microfinance cycle has turned adverse. So I think the growth numbers won't matter much for these banks. It will be more about what happens to their asset quality and the provisioning numbers. And then, there are a lot of these banks where management change is about to happen. Like in Bandhan Bank, I think there is a buzz that some new management will come. Even in Federal Bank, a new management is about to come. So there is some bit of uncertainty on that front. But having said that, I think Federal Bank is the one which looks the safest amongst the mid-tier banks, where the management transition could probably be smooth, and there is a decent 15% plus kind of growth which they can do. But yeah, nothing really very interesting that catches our eye in the small tier banking space as well. I think some more action is there in the gold finance, and those are the areas where we are looking more.
So what interests you in the gold finance, Muthoot as well as Manappuram? Which is your favorite?
So I think Muthoot Finance should do really well, because see, they have the benefit and the upside of the gold loans. The gold price is doing well. Competitors like IIFL are still not back in the market. And in times when personal loans are not easy to get, gold loans actually start doing well. So Muthoot Finance does not have a very large microfinance book. Now Manappuram, the gold loan business will do well, but it has to contend with a large microfinance portfolio where the cycle is turning adverse for everyone. So between the two, we really like Manappuram, and I think that is our top pick in the maybe the NBFC space. As far as next 12 months.
Digant, I just want to pick out on a point that you were highlighting. So you're saying that, microfinances, that's where you're not expecting much of a upcycle now or a move now. So then that means those small NBFCs like Fusion Microfinance, all of that is something that may not report good numbers in Q1.
I would think so. See, they have had a great party in the last 2.5 years. Okay, if you look at 2000, from 2021 to 2024, the entire sector has more than doubled in the loan book. And if you look at the rural wage growth and what is happening in the rural / the urban informal economy, the growth is not so much. So you have given a lot of loans, you have over leveraged your borrowers. I think, now it's time that, the growth should slow down, asset quality should, start deteriorating. So I think we were in a party phase for 2 years. Now, after every party, there has to be some hangover, right? So this is the hangover period for microfinance. So I think Fusion, Spandana, Credit Access, Arman, Equitas, Ujjivan, all these microfinance heavy companies, they should report like a very, very moderate 2025 or FY25, if I have to say that. So we would really not be bullish on these pockets yet.
Very good analogy that after that party there is a hangover, and clearly the MFI space will go through that. But what about insurance? Do you think ahead of that they had taken that party pill and now they're ready to party, because they have been on a bit of a slow lane for quite a while?
Yeah, absolutely right. I think it's been the reverse of microfinance. So there's been no party whatsoever in the last 2-3 years. In fact, there has been punishment. The regulator comes out with one or the other thing. Especially as far as the life insurance bit is concerned. The last being, this surrender charges getting revised. I think that surrender charges getting revised, that will be a good hit. So I think this year will still be a little bit of struggle for the life insurance companies, but we've started looking at them because of the good time correction which is there, good regulatory action which is over. And I think they'll get ready for a rally maybe 2 or 3 quarters down the lane. But I think the real bullishness is in the general insurance space. So someone like, say, an ICICI Lombard, they have been doing quite well. There's a management change there. The auto insurance has picked up. The health insurance piece, I think, also struggled a lot in the last 2-3 years. The losses there are probably ending. So we'll be bullish on general insurance for now. The life insurance piece, I think we still are 3 to 6, maybe 6-9 months away from the party actually starting. But I think the general insurance party has started, and ICICI Lombard is clearly the leader of that party. Maybe it will be followed up by someone like a Religare, which has taken Care Health Insurance, and then someone like a Star Health. But yeah, Lombard will really be the leader of the pack.
Thank you so much for joining in with us this afternoon on ET Now, talking to us about the full financial side. And surely insurance, maybe general insurance, the party seems like it's going to be starting now. So let's keep an eye out on that. Thank you so much, Digant, for joining in with us.
If you like this video, then like, share and subscribe to ET Now.